Which is kind of yours too, right? This only lasts until it doesn't.
That's right. I mean, I think, I broadly agree with that. This is not a long bull market call that we're making at all, okay? We were bullish, we turned bearish January 10th of this year at the exact top of the market. We were right for 1,100 points, S&P 3,600. We turned bullish. We think we're getting a rally at the end of the year, and then we're going to reassess from there. But this is by no means that I'm some now secular bull market, bull. That's not the case at all. But we're looking, if we're going to see a 10% rally that I think we're going to see, we want to be there for it, and we're going to call that.
Okay. So on the earnings front, right, you suggested earlier that earnings are holding up better than feared. Certainly seem to be. The question is, how long can they? And maybe it's just going to take a little bit longer for all of this to show up in earnings. You also suggest that the odds of a soft landing are rising. Now, this is where I would take significant issue with, because there's no evidence of that. Like, how would you make a call like that when I'm trying to figure out what you would base that on?
Sure. So right now, the unemployment rate is still 3.5%. Year over year spending, consumer spending is up 10% year over year. GDP on a nominal basis is up about 10% year over year. Okay, so the core of the economy at the moment is still doing very well, which is why I certainly think that earnings are going to be better than feared. Okay.
Look, quarter. I mean, even do you hear Moynihan the last hour with Sarah? I'd like to get back to your point. Sure. Right. I mean, he talks about people are spending a little bit less, but by and large, the consumer is doing pretty well.
Okay. Yes, exactly. So how? My view is not that we're actually going to have a soft landing. My view is that over the course of the next couple months, the view in the market is going to be that the odds of that have gone up a lot. And the reason why is because the market's going to see the Fed is done, and the Fed is done, and inflation's falling. We're seeing deflation. And that's all happening, amazingly enough, with the unemployment rate still at 3.5%. And the reason why I think inflation's coming down now without the unemployment rate rising is because the reasons for inflation were not necessarily, they were related to a lot of things, including the fiscal spending, the supply chain issues, and other things that are new to this type of cycle, which is why inflation can fall without the unemployment rate at the moment going higher.
I'm going to beg your pardon for just a moment. I want to alert our viewers, there is some action in overtime today by way of XPO. We're going to show that because they've done a partial pre-announcement. It's ahead of their investor day tomorrow, and as part of their spin of RXO, that's their high-tech brokerage business. So they have done a partial pre-announce. You may see shares start to move there. Look like their revenues were a little bit light, but the guidance they seem to have raised, which is interesting to note in light of the conversation that Eric and I are having right now. And it also, by the way, happens to come on a day where XPO was downgraded to a hold over at Deutsche Bank. So we're going to keep our eye there. It's important. It's interesting to think about the shippers and the transports, especially after what FedEx had to say a handful of weeks ago. But it does play into the story of things aren't really bad yet. And that's part of your story, too.
That's exactly right. It's all a odds game, and what are the expectations? And although I do think that 2023 is going to be a very challenging year because we're going to be living with this 4.5% or 4.75% Fed funds rate, which is going to be very challenging. And a lot of what has been holding up the economy, I think, is going to be wearing off over time. But with the information that the market is going to be seeing over the next couple months, the chances of that soft landing are going to go up, because ultimately, if the unemployment rate is below 4%, then you're translating that into a pretty strong, economy, and certainly tough to have a deep recession in that scenario.